Now, Property Monday continues with Switzer.
Hello and welcome to the program that keeps you in touch with the best and brightest minds in the business. On tonight's show, stocks trended high today, but is this just another day before another sell-off? Michael Wayne of the Medallion Financial Group will give us his best call on the subject. So without any further ado, let's bring in Michael Wayne, the MD of Medallion Financial Group. On a day when the market was up, a nice gain on the ASX 200, about 28, 29 points, but the telcos didn't do well, the miners didn't do well, but the banks are back in the good books. Michael, thanks for joining us.
Thanks for having me, Peter.
My pleasure, mate. Now, look, tell us, the banks, how come they've been forgiven? They were really on the nose a week or so ago.
Look, it's difficult to put your finger on it exactly. Obviously, the CBA in particular had a fairly big sell-off. The other banks, as we approach this time of year, it's actually coming up to the bank reporting season for 3 out of the big 4, so perhaps some positioning to collect some of those dividends. But when it comes to the banking space overall, if you look at sort of the performance and the earnings growth in recent years, it has been a bit challenging. CBA, it was approaching that $70 level. $70 has been a terrific level of support for it over the last sort of 18 months or so. So perhaps the market just decided that the banks looked overall fairly cheap relative to what had been happening in other sectors of the market. But when you look at the banks, earning growth is constrained ultimately. Dividend growth looks fairly constrained. So it really is dependent on sentiment as to which direction the banks go. So this time last year, or sort of the back end of last year, the banks had a very strong rally. Whether that's replicated this year or not remains to be seen. But I think if you try and look through the noise of all these sort of royal commissions and all these stuff that's unfolding with CBA, the banks still are fairly decent long-term investments. Yeah,
well, Michael, I guess what we're seeing, the stock market looks like a game of tennis. You know, one day the miners are in favour, they're dominating, and the ball goes on the other side of the court, and the banks are now in favour, and we sort of are stuck in this trading range. Are there virtually people who trade and are fund managers trying to make short-term profits until something decent comes along, either to drive the market down or to drive the market up?
Yes, certainly. There are all sorts of traders in the market. There are many of our clients are more medium to longer term investors, but these days you've got the algorithmic traders as well. You've got people taking positions on volatility. I was reading today that the short positions on the volatility index, the VIX, is at some of their highest levels ever. So at the moment, people are positioning themselves for the low volatility to continue. There have been a number of catalysts to spook the market over the last 3 to 6 months. I mean, in recent times, there's been a lot of turbulence on the Korean Peninsula, yet we've seen gold prices come off in recent days. We've seen bond yields also start to fall again. So the safe havens are out of play, and the market, I think, is just waiting for something. They don't not necessarily know what that is, because earnings growth has been okay, nothing spectacular, not only here in Australia but overseas as well. So it is very difficult to predict what is going to spark the market out of its stupor, but it will happen, and when it happens very quickly. So you've just got to be able to react to these things rather than try and predict what it's going to be necessarily.
I know, Michael, in America, the American Association of Individual Investors, they've turned really bullish, up 12% in a week. So those bulls, who generally are bulls, they have actually increased, to a factor of 12% in 1 week, which is kind of surprising given that Wall Street is so elevated in record territory.
Yeah, but it's hard to go against the momentum. And when you look at the US economy, it's still holding in there okay. We did see on Friday, I think it was, some fairly strong inflation figures out of the US economy. The earnings growth has been okay as well. So when there's nothing negative to speak of in terms of the overall economy, there's no reason why the momentum can't continue to grind higher. The back end of the year, particularly the last 3 months of the year, tends to be a period of seasonal strength. So we've had a couple of things that have attempted to throw us off course, but they just haven't done that. So there's no reason in many people's eyes to bet against the trend. The trend is your friend until it ends.
Yeah, telcos, they copped it today. What's your view on, is there a telco worth investing in, or do you give it away until it gets to lower prices?
Look, it's been a very difficult space. Sort of was speaking on radio this afternoon that Last year, the telcos were the worst performing sector in the market, and that's continued again this year, down 28% for the year to date. And that's been affected by the likes of your Telstra's obviously coming off the boil significantly. You've had TPG and Vocus, other major heavyweights in that sector, under enormous pressure. One that we've been looking at fairly closely over the last few months, and particularly since it's fallen recently, is a company called Chorus Limited. That's a New Zealand-based company. It's an old spin-off from New Zealand Telecom. They're basically rolling out New Zealand's equivalent to the NBN. And it's a different style of business in a different sort of market, and that's one worth looking at. But there's a number of headwinds when looking at telcos in Australia. There's excessive competition in NBN. There's ongoing competition potentially in the mobile network markets as well, particularly with TPG deciding to build and roll out their own network. So there's a race to the bottom in the NBN. There's going to soon to be a race to the bottom in the mobile deals. And I think that's just going to put further pressure on margins and further pressure on earnings in the short term. So my net phone is a smaller one that we kind of like as well. And Mason's having a particularly good run in recent weeks. But when you're looking at the bigger style telcos, I think there's just too much competition at the moment.
Okay, I'm going to give you a chance, Michael, to be a very courageous forecaster. Now, at the moment, the miners are on the nose after having a fantastic run. You know, do you suspect that the current dislike for miners will be turned around and they'll get back in favour again?
Oh, look, we've seen inflationary pressures pick up in China. We've seen inflationary pressures pick up again in the US. So perhaps your cyclical stocks, such as your miners, can have a renaissance towards the back end of the year. I'm pretty agnostic when it comes to the miners. I find them very difficult to predict with any certainty. When you look out, say, over the last 35, 40 years, since sort of 1980 or so, the market, excluding the miners, has actually outperformed the resources index. And that's despite all these super cycles and commodity booms and the Chinese emergence that we've had. So I take the view that over time, yes, the miners will have a very good year from time to time, but there'll also be their years where they do very poorly. So the risk isn't necessarily worth the excess return or the return that you get. But if I was to play the miners, I'd probably go for your BHPs of this world. They've got a lot of free cash flow with with commodity prices at these levels. They've got very high quality assets, but it's difficult to see or predict with any certainty what commodity prices are going to be in the future, and therefore it's very difficult to predict with any certainty what these underlying shares are going to be worth into the future. So
okay.
I give that one a miss.
Okay, mate, fair enough. Now, have you done any homework on television stations since they've changed the media laws?
Yeah, look, not necessarily either. There's been a lot of speculation about companies getting together. Today there was some news coming out about Fairfax and Nine sort of going their separate ways. So again, it's one of these things where it's very difficult to predict. I don't think you can necessarily try and pick corporate takeovers. Some people try and some people do it with varying degrees of success. But my style of investing doesn't allow me to do those sorts of things. So again, I'll probably wait and see who decides to get together before making that decision. If I was to pick media stocks, the likes of your APN Outdoors, your U Medias, for instance, they're probably our preferred picks in that space, just given the emergence or sort of the emergence of that digital marketing space. There's everywhere you drive these days. They've got rotating advertisements. They can charge more advertising dollars per advertisement, and they can also rotate those advertisements throughout the day. So that's probably the space in media that we pick the most.
Okay, you've thrown a few stocks at us, but what is the one that you really like most of all at the moment, and why?
Yeah, look, there's probably a couple in the diversified financial space, a couple of fund managers that have had their issues in recent years. The first one is Janus Henderson Group. This is a company that got hit very hard by the Brexit vote. They saw a lot of fund outflows. The falling pound actually hurt them significantly, but they've seen their fund flow start to turn around. They've also recently merged with Janus Group in the United States. Bill Gross of PIMCO fame is one of the main investors in that company, and that will give them a nice distribution platform into the United States. That's the first one. The second one is a company called Platinum Asset Management. Platinum was the largest fund manager in Australia when it came to international equities. They were usurped by the likes of Medallion, but I think Platinum have come to the point where they've reached a bit of an inflection point. Their fund performance has been significantly better. Their fund flows have also started to improve, albeit off a low base. So I think in time, the good performance will translate into fund flows, and you might see an improvement in the underlying business, that is Platinum. So they're two fund managers to watch out for on the ASX.
Michael, you might have done a little bit of a slip of the tongue then when you said medallion, when I presume you meant to say Magellan.
Yeah, I've been saying medallion a lot recently, so yes, you're correct. Magellan Financial.
That's right. I know medallion has a big future, but I just thought you were preempting that future then.
Yeah,
mate, thanks for joining us.
Sorry.
That's right. Well, it's good to see you got high expectations, mate. Thanks for joining us on the show.
Thanks very much for having me, Peter. It's good to be back.
That's right. That's Michael Wayne, who's the MD of Medallion, not Magellan.